Welcome to Daily Tax Minute. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Today's topic is bookkeeping simplified, and a few assumptions first. So this is a tax broadcast, so we are talking about tax bookkeeping. There's a lot of reasons you might want to do bookkeeping, but for this segment, we're only talking about income taxes. Second, this show focuses on the the bulk of people who might be watching it. That is self-employed people, small business owners, W-2 people that have investment real estate, basically people like me, middle America, people that need to know a little bit more than average about taxes, but we're not talking about sophisticated uh, nested entities, corporations, partnerships with equity transactions between them. So we're talking about the mainstream, the bulk of us. What do we need to have in order to maintain adequate tax records? And the third assumption we're going to make is that nowadays, most transactions go through an electronic processor, a bank or a payment processor, but there's some electronic digital signature of a transaction. Most of us have fairly little cash, and even if we didn't keep track of our cash, we can estimate it pretty easily, usually in most situations. So we're making those assumptions. So if that's the case, what two data sets am I talking about that we need in order to do appropriate, accurate, and legal tax bookkeeping? The first set is the bank feed. When I say you use bank loosely, it could be a payment processor. There are online bank-like entities now, but in any event, we're talking about a data stream of transactions. I don't know of any financial institutions that don't make their processing information available to its customers and to us accountants, where we can easily process that in another program to come up with an actual ledger for tax purposes. The second set of data we need is that, if you think about it, the bank transaction comes through with the date, the amount, the who, maybe a memo, but what it doesn't say is what it was for, what categorization. So the second set of data we need to match up is categorization. Accountants and bookkeepers call that a chart of accounts, and a chart of accounts done ideally links to the tax return that you're ultimately going to have to file. But in any event, we need to match up the bank data with the type of transaction. Fortunately, AI has taken us a long way towards making that part of it easy. If my bank feed sees, whether I'm using Excel or QuickBooks or anything else, if it sees that I've had several transactions from ExxonMobil and I've categorized that as fuel expense, well, then it knows. From then on, it knows it's fuel expense and just does that. And I can certainly do that, like I said, even with the spreadsheet program or with QuickBooks, and particularly, as I'm well familiar with, has made huge gains in the AI processing of those types of transactions. So all we need to do is match up those two sets of data, and we can come up with a reasonable basis to prepare a tax return, a defensible tax return, one that meets legal requirements. The flip side, if we're not doing that, if we don't have those two pieces of data, there's no assurance that we're meeting our tax filing obligations, nor can we defend a tax return if it's challenged. Would love to hear your thoughts or comments on this. I know we have a few bookkeepers that tune in occasionally. Would love to hear your thoughts. I'm easy to reach on social media, or contact me one-on-one through taxproblems.cpa. I'll be back tomorrow with another